Hey everyone, I'm Jen Sanasi, and this is your markets outlook on CoinDesk. Joining me on today's show is Fundstrat CIO and BitMine Chairman Tom Lee. Tom, welcome back.
Hi, good to see you.
Good to see you too. Now, I just got to start here. Our last video went a little bit viral, and everyone was commenting on that bed behind you. And so I got to start there. Tell me a little bit about the bed in your office.
Well, it's an actual bed. It's a bed that I use because I sometimes have super early mornings or super late nights, or I've come back from somewhere and I've taken the red eye, so I need to take a few minutes to mentally recharge. Yes, so it's actually a bed.
So smart. I remember one of the comments, I think it said like Tom Lee has a bed in his office and you're worried about your coins. Just like really hitting hard on your dedication to the craft and to the job. So thank you for clarifying that for us. I want to go back to our last interview. You made a prediction, $4,000 ETH by the end of July. Here we are at the end of the July. I'm going to give you the win. We're under $200 away from that prediction. Talk to me a little bit about what needs to happen for us to get there.
Yeah, and we got to 3,900, so we're within 100. I think that's within the standard error of a prediction. But to me, Ethereum is being rejuvenated, right? Because we know the community has been galvanized, and we know that there's just an army of interest coming because of the tokenization Wall Street wants to do, and they are choosing to do it on Ethereum. So I think when you think about the future value of activity, it needs to start getting discounted on Ethereum. And I think that's why the price still needs to adjust higher. And I think I mentioned that if we use multiples similar to Circle, you get to 15,000-ish for ETH, and that would just be a today value. So I think ETH is still undervalued. But we also know, just from a trading perspective, look, there's a lot of people who think ETH has become sclerotic, like it's a stale layer one. There's more things happening on Solana or Sui, but the reality is that ETH is a legally recognized blockchain operating within the US, and it's never had any downtime. I thought it was so interesting that Vitalik on the 10th birthday of Ethereum notes zero downtime. That matters to Wall Street. I actually think that's almost a little bit of a hat tip to Wall Street because banks care about zero downtime. But Yen, as you know, there's people who have a pair. They like something else and they're short ETH. So I think 4,000 is a line in the sand. But to me, it's just a matter of time.
I know that you're very bullish on ETH. That you just said it's just a matter of time. But let's look at the bear case. What happens if we don't get to that $4,000 level?
I don't think it's critical. I think it's like someone who just months ago would have said, well, Bitcoin can't hold 100,000. How many people said that Bitcoin wasn't going to hold 100,000 because one, there's nothing supporting it, or there's no new buyers behind 100,000. But guess what? Bitcoin's 120,000 now. In fact, I think that there's plenty of new buyers for ETH above 4,000. So to me, I think 4,000. If someone's thinking that that's like a level of resistance that represents something super meaningful, to me, I think it's paper.
I was reading an article that quoted you recently, had you describing the recent market rebound as the most hated V-shaped bounce in history. Can you just unpack that a little bit for me?
I think every bounce since COVID has been a hated bounce, because if someone was personally realistic and introspective, they didn't believe we could recover from that initial COVID decline because the world economy shut down. And then when stocks tanked because Fed Chair Powell initiated the fastest rate hikes in history and stocks tanked in 2022, I know that every one of my institutional investors said, Tom, there's no way stocks can come back. Not every, but most, because they said the Fed is trying to engineer a recession. So those two rallies were very hated. This rally, because stocks tanked because of tariff Armageddon. And we have to keep in mind that if you look at political donations or political affiliations, 60% of professional stock investors voted for not President Trump. They voted for someone else. And that means that the stock market does not believe the Trump agenda. And that's why when stocks fell in April, and we talked about a waterfall decline, having symmetric bounces unless there's a recession, it was met with skepticism because the pushback was the Fed is not going to unleash liquidity. So there's no way you're going to get a V-shaped bounce. Well, we got a V-shaped bounce. In fact, that is consistent with history. And I think what makes people really hate these rallies is that since the end of 2019, economists have become very important voices in macro decisions for correct reasons. Economists help you decide how an economy behaves when you shut it down, or how you deal with inflation, or how you deal with tariffs. So they are obviously are important voices. But when economists start to tell you that you have a recession and therefore you shouldn't own stocks, keep in mind economists have predicted like 13 of the last 3 recessions. So I think that has made this the most hated rally. And that's why, of course, once we broke to new highs, stocks have been levitating, and there's still a lot of cash on the sidelines. That whole analog applies to Ethereum, by the way.
You just said we're going to see a lot of new buyers above the $4,000 level when it comes to ETH. What do you think when it comes to Bitcoin?
Yeah, I think Bitcoin has now become accepted enough that it's part of people's steady buying. I think there's plenty of now traditional finance investors stacking Bitcoin, and they're buying it every month. And I think that's why it's holding steady here. And to me, for Bitcoin really to make its next quantum move, I do think it's dependent on global liquidity. And so the Fed, as you know, is on hold. But if their next move is to hike, then the entire stock market really is going to have to fight through that. It won't necessarily decline, but it has to fight that. And the Fed argument there would be, well, the economy is so healthy, I should be raising rates. But the reality is, at this point in the cycle, the Fed should be easing. It's a question of when. And if they begin easing in the fall, then I think that's going to coincide with Bitcoin making a step function higher. And I still think 200 to 250,000 is possible.
Midnight is a privacy-enhancing blockchain, introducing vital, programmable privacy and selective disclosure capabilities. It means DApps can allow users to control what information is revealed without putting sensitive data on-chain, allowing you to break free from the limitation of choosing between utility or privacy. We deserve more when it comes to privacy. Experience the next generation of blockchain that is private and inclusive by design. Break free with Midnight. Visit midnight.network/breakfree.
I don't think we spoke about Bitcoin the last time I spoke to you, which was probably about 2 weeks ago. So 200 to 250,000 by the end of the year. After I spoke to you, Rick Edelman joined me on the show. His prediction was 500,000 by 2030. It feels like yours might be a little bit more bullish than that if we look at the next 5 years.
Yeah. I mean, in some ways, I think Rick's probably has a range of numbers. I'm sure 500,000 is just one of the realm of possibilities, because if Bitcoin gets to 500,000 and we're talking 5 years from now, gold's network value probably is close to 27, 28 trillion. So he's just saying Bitcoin will be valued at 1/3 as digital gold, merely as digital gold. And so I think that's conservative. I mean, I think it won't take 5 years for Bitcoin to supplant the network value of gold. So that's why I think when you see something like Cathie Wood at ARK predict over $1 million for Bitcoin, that to me 5 years from now makes more sense.
I want to pivot a little bit now and talk about BitMine. That was the focus of our conversation last time you were on, and there's been an update there. BitMine recently approved a $1 billion stock buyback program that was approved by the board. Talk me through the strategy behind this.
Well, BitMine's strategy, and by the way, BitMine, the goal and the sort of near-term sort of target is for the company to acquire 5% of Ethereum, because we think that there is a lot of network value and alchemy that happens at 5%. The real focus of the business is to use capital markets and other ways to acquire roughly 5% of Ethereum. And the company, as of its latest update, had 625,000 ETH, and with cash, almost $2.8 billion worth of ETH. But there are going to be times where the stock might actually be at a level where the best use of capital is to buy back shares. Now, I don't think it's prudent for the company to say this is the price where that would happen or when we're doing it. But it is a toolkit. And of course, BitMine has plenty of liquidity available because the company has no debt. Or I think the legacy has like $1 million of debt from its last NQ, but it really is essentially a debt-free company.
Are you able to tell me a little bit more about what signals tell you it's time to prioritize a buyback over accumulating more ETH? What goes into that decision-making process?
Well, I really shouldn't be more specific than that, because I think I want to stick with what is in the press release, but that really gives everyone pretty good information.
All right, and Tom, the last thing I want to hit with you, we're starting to see some of those Q2 earnings reports coming in. What are you watching when it comes to crypto equities when we look at the Robinhoods, the Circles, the Coinbase? What's standing out to you?
First of all, I would say that if I was just to overlay what I see as activity, and that's what's being reported by exchanges, and Robinhood, as you said correctly, is essentially really geared as a crypto play. It to me, it doesn't seem late cycle. I think it's actually possibly mid cycle for crypto. But then I've heard some people say that this crypto cycle could be changing because there's now institutional involvement. And as you know, when you look at a traditional cycle for a risk asset in public markets, not in crypto, there's four cohorts that ultimately drive the top in a price cycle. You know, it's retail, it's high net worth, it's institutions, and then it's family offices. And until all four cohorts are really all in on a sector, you never see a peak. And that's excluding the global aspect of crypto. So to me, I think that there's been robust results reported, but I think to me, especially when I look at the sponsorship and ownership of equities like Coinbase or Robinhood, it still doesn't feel late cycle.
Thanks so much for joining the show today. It's always a pleasure having you on. I'm sure we'll chat again soon.